What's going on, guys, and welcome back to another video. So in today's video, I'm going to directly talk about the housing market, the stock market, and cryptocurrencies. I want to address what many people are doing right now, and many economists are worried that this could cause major issues in the future. So whether you are invested into the stock market, cryptocurrencies, or the housing market, into real estate, doesn't matter. But make sure you follow along so that you understand what could potentially happen based on what many experts are currently saying. So let's jump right into this video. First, many experts worry that one of the things that is causing a lot of inflation, right now, is the fact that too many Americans, and again, too many Americans, have more money than they've ever had in their lives. Now you're probably thinking, well, I don't have much money. But here's what's happening. And again, this is crazy. It's insane what is going on. But right now, economists are saying with all the stimulus that has been pumped into the economy, that is causing more inflation. Yes. The second thing, many experts are now saying that homeowners have been taking out cash out refinances, pulling equity out of their homes. And now they're sitting on just so much cash. They're cash heavy. They don't have a lot of equity in their homes anymore. Their stock portfolios are surging. Cryptocurrencies are going up. Everything's going great, right? Well, let's talk about what's actually happening. So here's what's going on. Right now, there's about 2%, less than 2% of homeowners have a negative equity in their home. They're upside down in their mortgage. Just 2%, less than 2%. That means foreclosures are not going to be happening anytime soon, at least not at a massive scale like many people were predicting. We also know that right now what is happening is that people are cashing out their equity in their homes in order to move that money elsewhere. They could be buying cars, which is not a great investment because automobiles, unless it's a exotic car of some kind, it's probably not going to go up in value. It's just going to decrease in value over time. Okay? So people are buying cars. They're buying furniture, which goes down in value. They're buying electronics, which go down in value. And potentially, they're putting money into the stock market and cryptocurrencies. And here's what you need to understand about this. Right now, first off, Bloomberg has been saying for a little while that this is one of the reasons why the stock market and crypto has been surging, is because many people are taking the money that's been sitting on the sidelines for the past 20 some months, and they're going to use that to invest, which I think is incredible. I think that's a great thing. If you are not currently invested and you want to start investing, there's a great app. It's called Webull. They will give you 2 free stocks valued up to $1,800. All you have to do, go and sign up with the link that I put down in the description box below, deposit $100, and they will give you 2 free stocks. It's a pretty good deal. Now, here's what I can tell you. And listen to these facts as well, these stats. Recently, 25% of Fannie and Freddie mortgage-backed securities were cash out refinances. This means that we have seen a lot of mortgages over the past year, 2 years. But according to reports, 25% of those, 1 in 4 people, have been taking out a mortgage but cashing out their equity in their home. That's big. Now, here's what else we're hearing. 24% of those were simply homeowners taking money out of their existing homes. Okay? So here's the problem. Here's the problem with this. When people are taking money out, that means they have more debt. Now, here's the good thing, and you may not know this, but how it's written in the tax code is you are not taxed on debt. So when you go and you get a cash out refinance of your home, this is what a lot of very wealthy people do. Instead of selling the home and taking the money and then having to pay taxes on that because it was a sale, now if you just do a cash out refinance, what happens is that is debt. So you don't have to pay taxes on debt. So let's say you do a cash out refi and let's say you get $100,000, into your bank account. Well, a cash out refi is debt. You owe debt. So Now it says $100,000 additionally in your bank account. You don't have to pay taxes on that. And that's how rich people, kind of, circumvent the system, because now they know, okay, I don't have to pay taxes. I'll just go get into more debt. And as long as I can cover that with my assets, great, I don't have to pay taxes. So, a little tip for you guys. Now, here's something that I thought was extremely interesting. The refinances happened at a rate of 25% in September, 28% in October, and so far 30% in November. Now, this is nothing like it was back in 2007, 2006, because then it was, I think, in the upper 80%. So it was very different there. But according to experts, they still worry that this is not a good sign for real estate. Now, why is all this important? Okay, I just rambled on about a bunch of different facts, different things that are happening, what economists are worried about. But why is all this important? Here's why it's important. Right now, there are certain costs that are staggering, and they're negatively impacting lower income and middle income families. A couple of those costs. Number one is real estate. Rental prices, homes, it's just staggering. It's so much. Many people that are just first-time home buyers or their middle-income families can't get into real estate because they just don't have the money. They can't afford a payment. That's an issue. But the rest of this, I somewhat grouped together, and we're just going to call it retail spending. Now, here's what you need to understand, and here's what the major problem with retail spending actually is. People are spending very aggressively. Just in October, from year over year, we saw a 16% growth. Okay? Americans are finding anything and everything to spend money on. It doesn't matter. Right now, I've talked to many friends. They are trying to find a new vehicle. They can't, because you cannot go to the car lot and just find any vehicle because it doesn't have all the different bells and whistles. Okay? I saw a report, I think last week or 2 weeks ago, where GMC is actually going to stop putting heated seats in their 2022 vehicles because of the semiconductor shortage. So that's an issue there. So now people, if they want heated seats, which I could care less about heated seats. My wife absolutely loves them, wants them in every single vehicle. So for my wife, that would be a deal breaker. She would not go and buy a new vehicle because, well, it doesn't have heated seats. Well, that's an issue. But let's get back to all those people that are doing the cash out refinances, right? Let's go back to them. They're taking equity out of their homes. Now, let's add in all those people who are pulling money out of the stock market because we saw record highs. They're pulling money out of the stock market. They're pulling money out of their cryptocurrency accounts. Okay, that's fine. I understand it. But let's also factor in what happens if the market were to dip. Now, get this. So you do a cash out refinance when your home's at $500,000. Okay, and let's say you borrow 80%. Was that $400,000? So you borrow $400,000. That's your new mortgage. And the market dips. Let's say it comes down to, $440,000. You still have a little bit of equity, not a lot. Okay? Your margin's getting closer. But let's say you did the exact same thing with your stock portfolio. Okay? You sold, right? Great, you sold. But here's the thing, once it dips, if you are one of those people, and get this, let's add another twist. Let's put another twist into this. What happens if you are one of those 4% of Americans that decided to quit your job because stocks were soaring, cryptocurrencies were soaring, and you did a cash out refinance on your home? What happens then? What happens when things turn around and you cannot afford the mortgage on your home? You can't sell any more stocks. You can't sell any more cryptocurrencies. You can't do that. What happens then? Now, do I honestly think the real estate market's just going to come tumbling down like we saw in 2008? No. Do I think the stock market and crypto is just going to plummet? No. Do I think both markets have the room to come back down, stabilize before they head back up? Yes, I do. And that's the issue. And again, here's what makes matters even worse. President Biden is pushing to get the Build Back Better Act passed. If he gets this Build Back Better Act passed, chances are we're going to see increased inflation. We're going to see gas prices go up. Everything's going to be more expensive. Real estate probably going to go up even more. Okay? We're not going to get another stimulus check. We're not going to see the government bail us out because we borrowed too much against our home. We sold our stocks and we spent the money on cars and furniture and electronics and presents for Christmas. That's probably not going to happen. So here's my warning to you. First, make sure you start investing. You do not have to invest a lot. Many people think, oh, I don't have $10,000 to invest. When I first started, neither did I. I had $100. That's all I had. And so I started investing. Okay? And many people say, oh, I don't have $100. That's fine. Use a company like Webull. And again, I told you in the beginning of this video, open up a Webull account. There's Robinhood, there's Webull, there's M1 Finance, there's TD Ameritrade. There's so many different ones out there. But open up a Webull account. If you don't have $100, don't put $100 in. You don't need to put any money in. As long as you open up an account, you get one free stock. But if you put $100 in, you get a second free stock. And I think the second stock is valued between, I think it's like $800 and $1,500 or something like that. So it's a pretty good deal especially if you get one of the stocks that's worth up to $1,500. But here's one of the things I want to warn you on. If you are thinking about refinancing your home, right? That's understandable. That's a great way to do it. That's a great way to pull money out. It's a great way to, instead of selling your home, to take some money and put some of that money into the stock market or to pay off debt or things like that. Again, you're going to borrow at like, 2-3%. So that's a really good deal. But before you go and do that, make sure you understand that this isn't a short-term solution. If you're going to refinance your home, don't go and sell it in 3 to 6 months. Don't do that. You're going to lose. You're going to be upside down. Okay? It doesn't make sense to do that. If you are going to sell your stocks, sell them when the market's going up. Okay? And I want to bring this up because I've heard from a lot of people that over the past week, they sold their stocks. Now, I don't recommend that. Go and sell your stocks when the market's going up. When the market is just, everyone's being greedy, that's when you need to sell. When everyone's being fearful and they're worried that the market's just going to collapse, that's when you buy. You buy on red days, you sell on green days. Do this. It's a very simple strategy and it works. So that's what I wanted to kind of bring to your attention today. Right now, the housing market insanity. You cash out refinance to move your money into something that is going to be a depreciating asset. Or depreciating asset isn't really a word. A depreciating commodity, depreciating item, right? So do not do that. Take your money, if you're going to refinance your home, put it into something that's going to grow. The stock market will grow. But don't buy something, see it starts tumbling down a little bit and sell it, because that's an automatic loss. You can potentially hold on to it through the ups and downs, and eventually, whether it's in 3 months, 6 months, a year from now, it's going to just go back up. So we'll see what happens, but as I know more, I promise I'll come back on and share all the latest news and updates regarding the real estate market, stock market, cryptocurrencies, and everything in between. Again, I just want to thank you guys for watching. Hopefully you have a wonderful rest of your day. If you enjoyed today's video, do me a favor, hit that thumbs up button, consider subscribing, and I'll see you guys on the next one.